So process. Let's get started. Once again, I want to congratulate those of you who are here ahead of time. And what do I have for you guys today? I have an amazing topic to share with you guys. This is one of the things a lot of traders ignore and they don't make money. All right. Tonight, we want to talk about twin trading and trade management. We want to talk about twin trading and trade management. Trade management is very, very important in the world of online trading. If you really want to be successful trading the forex market, if you want to be successful trading in the synthetic market, the crypto market, you definitely want to know how to manage your trade. Otherwise, you are going nowhere. And I have to be sincere with you, trade management also carry a very good percentage when it comes to trading. A lot of newbies and intermediate traders are not making money because they ignore trade management. They do not know how to manage their trade. That is why. And that might be one of the reasons why they are not making money. But I tell you, if you really pay attention to every bit of information and details I'm going to be sharing with you tonight, trust me, your trading is going to change if you put that to work. And if you try to pay attention to everything I'm going to be sharing with you this night, okay? Trade management is very, very important. It's one of the vital aspects of online trading to make money consistently. Why is trade management important? Trade management is very, very important because the financial market is not stagnant, okay? It is very, very diverse. So, and at some point, market may reverse wherever you least expect it. So if you have a very good trade management ability, it's going to help you to secure any profits you must have made and also to cut your loss short when it is needed. All right. And we'll also be talking about twin trading. What is twin trading? Twin trading is when you have divided your loss size into two places or more. All right. So I'm going to be sharing all of that with you. So pay attention to every bit of information I'm going to be sharing with you, as I've said. Please, please, please be sure to ask me anything that is not clear to you. So I want to congratulate those of you who are here because I'm not going to be entertaining any question outside this classroom. So if you've got any question, make sure you ask them now, okay? Even if it's a question that is not related to what we are teaching tonight, it's going to be a privilege to answer that or to enlighten your work to be done. All right, so let's move forward. So now, if you have heard about twin trading, please type into in the chat. I want to know. If you have heard about twin trading, please type into in the chat. I'm sure you must have heard about trade management, but there are ways you can manage your trade. So I'm going to be showing you different ways you can manage your trade tonight. But I want to be sure you've heard about twin trading. If you have heard about twin trading, type into in the chat. All right, Mr. Francis, glad to know you've heard about it. Okay. Who else is typing in the chat? If you have heard about twin trading, please drop into in the chat. I want to be sure. I want to be sure we are on the same page. I want to be sure we're on the same page. If you have heard about twin trading, type into in the chat. It's not all about spending a lot of time, but it's all about spending quality time. That is what is very, very important. So if you have just joined us, if you have heard about swing trading, type into in the chat. For those who have just joined us, if you have heard about swing trading, type into in the chat. I want to be sure we are on the same page before I proceed. This is an interactive section, so it's very, very important you respond to any question being asked from you guys. So if you have heard about swing trading, type in 2. If you have not heard about swing trading, type in no. You either type in no or 2. If you've heard about swing trading, type in 2. You have not heard about it, you don't know anything about swing trading, type in no in the chat. Quickly, guys, still waiting for your response, so let's keep moving. All right, somebody is raising his hand. It's not yet time to raise your digital hand, please. So we'll get to that level, okay? Okay, thank you so much, Mr. Francis. So let's keep moving. So now I've explained what swing trading is all about. Okay, Mr. Idu said no. All right, so tonight I'm gonna we'll be diving into it properly. So pay attention to it, because this class is going to help you a lot to know what swing trading is all about and how to implement it in your trading. Now, let's take it gradually and step by step. Now, when we talk about swing trading, like I've said, this is all about dividing your lot size into 2 places or more. All right? Now, let's say I'm not going to be talking about risk management, but I'm going to pick 1 or 2 points right from there before we to be able to help us move further into swing trading. All right. So now, this is how it works. Before you think of going into a trade, it is very, very important to know your risk. Okay, to know the exact risk you are taking. It is when you know the exact risk you are taking in proportion to your capital, that is when what is going to determine the lot size. All right, the lot size. Okay, lot size, this will be in proportion to your account balance. Okay, you don't just go into a trade blindly without knowing the actual lot size you should take in proportion to your risk management. All right, now let's say you know the exact risk you want to take. Let's say you want to risk 1%, 2%, maximum 3%. And now, after you have defined your risk management, okay, through your stop loss. Let's say, for example, after you have calculated your lot size, and the lot size you are to use, let's say it's 0.1, right? It's 0.1. Okay, this is just an assumption. Okay, my assumption is that you have calculated your risk, okay, and the lot size you are to use, for example, is 0.1. Okay, 0.1. Now, this is how swing trading works. Swing trading is all about you dividing this 0.1 to 2 places or more. Now, let's say you have been given, for example, let's say you have been given an entry signal, okay, entry signal with let's say this is your entry price Then you have TP1, TP1, TP2, and TP3. Okay. Just a moment, need to use the pencil properly. Okay, let's TP2. Now, once you have been given entry points, stop loss, TP1, TP2, TP3, this is invariably telling us that, okay, if we are to go into this trade, we want to be able to take profit 1, take profit 2, take profit 3. This is not telling us that we should use 0.1 in 3 places. Because if you use 0.1 in 3 places, that means you have violated the rules of engagement. You have used more than the actual risk you intend to take. Now, this is how it works. Let's say we have reached 3% or 2%, and our 2% is telling us that we should not use more than 0.1 lot size. This is what we do. We want to be able to divide this 0.1 into 2 places. Then that means you are going to have 0.5, okay, and another is 0.5. All right. So that is it, guys. So now, if you are to calculate these two together, you will see that this is what we are going to have, is 0.1. So now, each of these is 0.5. The take profit is going to target, one will target this, and the second one will target this. All right. And if you have to use take profit 3, that means you have to divide this into 3. Let's say you have 0.1, okay, then you have to divide this into 3. Probably you use 0.3, another 0.3, and one will be with 0.4. All right. So if you should calculate all of these 3 together, then you will see that you are going to come up with 0.1. Oh, sorry guys, I think I'm mixing something up. This should be 0.05. Okay, why this one should be 0.05? Sorry about that. Okay, why this one will be 0.03, and this one will be 0.03. Okay, so sorry about that, just being too fast, trying to meet up with the time. Then this one will be with 0.04. Okay, I hope this is correct. So guys, so by the time you sum this up, then you will see that you have 0.1. That is, if you have an entry with 3 different take profits. Okay, so this allows you and me and gives us the opportunity not to be able to risk more than what we can afford. I hope this is getting clearer. This gives us the opportunity not to be able to risk more than what we can afford. So even if you have more take profit, like TP4, for example, that means this is 0.1. 0.1 is what you are going to divide into 4 places. All right, that means you're going to have like 0.002, okay, with another one 0.02, okay, 0.02, then it's another one with 0.02, 0.04 thereabout. Okay, so all you need to do is just to bring out your calculator, then type this into your calculator and divide it with the number of TP you have right here. All right, so that is that. So that will tell you the actual lot size you are to use on each take profit. And remember, all the trades right here, okay, they are going to use the same stop loss. Remember, you have been able to calculate the lot size based on the stop loss you want to use. And remember, this trade right here, all this trade right here, they are one. It's just that you are using your knowledge to be able to capture more profits because you believe price is going to come here, and once price comes to take profit one, it has the tendency to move to take profit two. Okay, this is developed in a way that you won't put your eggs in one basket. Instead of targeting all the way to take profit 4 with 0.1, you now say, okay, I am not 100% sure that price may come to take profit 1, take profit 4 if I use all my lot size to target this area. All right, okay, I believe, let me take small profit right here. If price comes to this level, let me take small profit. And if I am fortunate enough, price moves from here, move down to the level, another higher level that I believe price is going to get to, then I want to take more profit until it gets to an area where I believe price is most likely going to turn around. So that is why you want to be able to divide your actual lot size into any places you feel like. Maybe 2, starting from 2, 3, 4, 5. You must have seen some entry that has some signal that we have, like take profit 1, take profit 2, 3, 4, 5, even up to 6. Okay, if you have more take profit up to 6, all you need is just to divide your own actual lot size into the number of the take profits you have. All right, then you enter your trade at the same area for all of them. Now let's say you enter 0.05 at 1, 2, 3, 4 entry, for example. That means the rest 0.05, you should enter them at the same level where you enter the first one. I hope you understand. And if you have your pending order, you should use the same pending order for all of them with the same stop loss. It is just that the take profit will be different because you are targeting each level as your take profit. I hope this is clear. That is the advantage of twin trading. Twin trading allows you and gives you and I the opportunity to pick more profit as price keeps going in our own direction. Okay, so Mr. Ido said he's new into trading. Okay, probably you may I ask, do you have some kind of knowledge in forex, crypto, or thereabout, particularly in forex? If you do not have, then probably you may want to take our forex course to be able to learn how to trade properly. So if you don't know anything about forex, this will definitely be new to you. All right, but don't get it twisted. It's going to be a step at a time. What you are learning right now is opening your eyes to what is possible in the financial market. Okay, you've come to the right place to learn. It's all about, opening your eyes, be ready to learn, and ready to practice. Okay, I hope this is clear. So it allows you, twin trading allows you to be able to take more profit as price keep moving into your intending direction. That is just that. And it is good to be able to split your lot size to capture more profit as price keeps moving. So if that is very, very clear to you, please let me know in the chat. If that is clear to you, please let me know. Everyone, let me know in the chat if that is clear. Let me know if that is clear to you, please. All right, thank you so much, Mr. Yes, Mr. Inka or Mrs. I beg your pardon. You need to take the forest class to be able to understand how trading works. We actually have free uh, class that you can actually go on our YouTube channel to learn something new since you are new to trading, to learn from the scratch. All right, you can learn from the beginning. Then when you get to the level where you have to pay, you will know. Right, but it is good to start from the scratch so that it will take you from the kindergarten up to the university level where you graduate. Right, so that is that. So everyone, please let me know if this is very, very clear to you. You can go on any of our group or go on our Telegram group. That you can find our link right there, our YouTube link right there. Click on it. Also on our page or channel, just type in for Forex Basics day one. Then it's going to pop up. Then you can watch day one. Jot whatever you feel like jotting down. Watch day two. Do the same thing. Watch day three. Right from there, your eyes will be open to what is possible in the financial market. And I bet you've come to the right place to learn. So let's keep moving. So I hope this is very, very clear to every one of us before I clean this up. So let's dive into the trade management. So trade management is something that is very, very important as well, right? So permit me to clean this up so we can dive into the trade management. Okay. All right, so let's dive in. So are you ready, guys? So I'm going to show you two different ways you can manage your trade. It's very, very important for you to know how to do that so that you can be able to make money and secure your profits when it is necessary. So now for example, let's say before you dive into before you think of managing your trade, you must have entered the trade. Either you are buying or you are selling. Now, let's say this area right here, right at this point, this is where you're clicking on buy button. Okay, you are saying price should go up right from this level, and now this is where you have your take profits. Okay, for example, let's say take profit one or your overall take profit. Okay, this level right here, this is where you have your take profit, and now right here, this is where you have your SL. Okay, and this is your EP entry point. Now, let's say you have entered the trade right here, okay, thinking price is going to go up, and you put in your SL, and your analysis says price should go up, and let's say after probably 1, 2, or 3, 5 hours or thereabouts, depending on your trading time frame, let's say price has gone up. Okay, price has gone up into this level right here, which is almost halfway to the profit level, which is this. All right, almost halfway to the profit level. Now, trade management is very, very important right here. Okay, because price has gone up to this level. You need to be able to manage your trade. because you never can tell, because the financial market is very, very diverse. No one can predict 100% what is going to happen in the next 1 hour or 30 minutes. We're only using the chart to forecast what is likely going to happen. Likely going to happen, not 100%. So now, let's say price has gone halfway to this level right here, and your analysis says price is going to come up here, it's going to get to this level. Because market is diverse, anything can happen. Price may get to this level, this halfway, and return back to the downside to hit your stop loss, to take you out in loss. If you don't know how to manage your trade, can you imagine that? A trade that has already been in profit, in a substantial profit, now returns back to hit you out in stop loss. That means if you do not manage such trade, you are not a good trader. You are a reckless trader. So trade management is very, very important. So the moment price moves in your favor up to a certain level, you want to be able to secure some profits, okay? Or at worst, secure your capital. So how do you do that? Number one, you need to move your stop loss to your entry points. Now, take a look at this. This is your stop loss. For those of you who are new, like Mr. Olayinka, stop loss is an order you are giving to your broker, okay, to take your trade out in a loss, okay, to cut your loss short. It's an order you are giving to your broker to cut your loss short whenever the trade moves against you, okay. Stop loss protects you not to be able to blow your accounts completely, so that only 3%, 2%, 1% of your account can be lost and not all the money in your account. So that is what stop loss does. So now, let's say this trade, this is your entry point, which is EP. This is where you entered, and price has moved halfway of your take profit target. Take profit is TP, right? Now, the moment price moves in your favor, the first thing you want to do, the first part of trade management, is to move your stop loss, okay? Change your stop loss value, change the number to your entry point value. Now, let's say this is your entry, right? Let's say your entry number is 0.400, let's say 4,000, for example, okay? And your stop loss is 0.2,000, for example. All right, this is where you start your stop loss, and this is where you enter the trade. Now, the trade has moved. Let's say this trade has moved up to this level, is 0.7,000, for example. Now, you can see you have made about 3, okay? You have made about 0.3 thousand in addition to your entry point. This is what you do, the first part of trade management. Since the trade has moved in your favor, you're already in profit. You want to change this value right here to this one, okay? So the moment you change this one, to this one, this tells us that this trade right here, it is absolutely a risk-free trade, as at the time you change this 0.2,000 to 0.4,000. That means you are not risking any money again on this trade, because you are protected your profits. Sorry, your capital. All right, you have protected your capital, which means you have moved your stop loss to your entry point. So if price now returns, come down to this place and hits you out, that means you are break even. We call it break even. Break even is when you don't make profits and you do not lose. I hope you understand that. When you don't make profits and you do not lose. So if price now returns back to your entry because you have changed your stop loss to your entry price, then it will now eat you out in no loss, no profits. I hope this is very, very clear. So that is number one thing you want to do when it comes to trade management. The moment price or your trade moves in your favor, either you are buying or you are selling, it moves in your favor, like maybe ratio 1:1. You reached 1, you have gotten 1 already, move your stop loss to your entry. Okay, once your trade moves in ratio 1:1, you reach 1 and it has given you another 1. So then you move your stop loss to your entry, then you have secured your capital. That is number one. Number two is when the trade, let me try to clear this, is when the trade, you are able to secure part of the profits. Okay, so I'm still going to use this illustration. So let's say this is your entry. Okay, EP, entry point. Okay, this is your stop loss, right? Now let's say we enter right at 0.4 thousand. Okay, stop loss at 0.2 thousand. All right, now price has gotten to this place. Let's say price has gotten to this place. Let's say it has gotten to 0.8 thousand. Okay, it has gotten to 0.8 thousand. Remember, the moment price moves in ratio 1:1, maybe price moves from here to 0.6 thousand, you have moved your stop loss to your entry. Now, as price moves further in your favor, you want to change your SL above this level. Okay, let's say you now move your SL to this level, is 0.6 thousand, let's say 6,000. Okay, remember price, this is where we have the current price right now. This is your entry price, this is your stop loss at the beginning. Now as price, current price moves to 0.8 thousand, then your stop loss, you move it from here. Okay, move it ahead of your entry price. So which means if price return right from here to this place, you have made 0.2 thousand as your profits. Okay, because if you should deduct this from this, gives us 0.2 thousand. I don't know if you understand that. So that is trade management. So as price keeps moving in your direction towards your overall take profit, then you keep moving your stop loss as price keeps moving. Hope you understand this. Please let me know if this illustration is very, very clear to you before we dive into the chart, so I can show you the technical area where you can put in your stop loss. It's important to really explain this so that you know what and what to do. Then I can show you the technical area where you have to put in your stop loss. Let me know if this is very well understood. And let me know if you have any question, please. Let me know if you have any question, please. Well, thank you so much, Mr. Francis. I'm glad this is very well understood to you. So Who else is in the room? Let me know, everyone. Let me hear from you. I want to hear from others before I move further. Let me know if this is clear, everyone. Okay, because of our time, I need to hear from you guys. Can if there's no more response, then I have to close the section. That means no one is you guys are away, just just log on to the class and left. So I need to be sure we are together. If you really understand this, please let me know. All right, so let's move in. Let's keep moving. So I believe this is very well clear to everyone. So now let me show you the logical area you need to tap to place your take profit. Okay, while we are managing your trade. Now let's go to lower time frame so we can see something clear, very, very clear. Okay, so guys, for those of you who have been in the business for a while, you know what this is all about. One of the things and one of the areas you want to be able to determine to put in your stop loss to manage your trade properly is to be able to follow a swing low. Okay, now for example, let's say this is where you enter the trade. Okay, right here, this is your entry point, EP. This is your SL. Okay, now you want to be able to see that price moves and creates this structure. Okay, whenever price breaks a new high, okay, look at this place, this high has been broken. So the last low right here should be your ideal area to put in your stop loss. Now let's say price has moved to this point right here. Okay, what you need to do right there is to change your stop loss value to your entry point value. Okay, to your SL right here. This is no more SL. You have changed it and put it in your entry point because this is where you currently have the price. Now the moment price comes down, push back up and breaks this high, then you want to change your SL from here and put it right here below the last low, because this is the last low. Remember, this is where we currently have price right now. So our price has broken this high. You want to move your SL from the entry point to this level. So as you move your SL to this level, that means you have been able to secure some profit right between the entry point and where you have the SL. So if price now eventually returns back to this level where you have the SL, then you have made some money in between, despite the fact that price returned. Now, the swing low right here is a logical area for you to put in your stop loss. Why? Because it is unlikely for price to come down and eat you out in loss. Why? Because the moment price keeps breaking highs, that tells us that price is going up. But remember, at some point, price is going to reverse and break the low to change direction entirely. All right? But it gives you about 70% assurance that price is going to keep moving up. So this is the current price. No, as price pushed down to this level and moved up again, breaks this high, then you want to change your SL from this level, put it at this last low. because that is a logical area for price not to return to in a hurry. All right. So in as much as price keeps breaking high, you keep pushing your SL. Okay. Keep pushing your SL until price will eventually come down to change direction and eat you out in stop loss. So as price moves you, eats you out in stop loss, remember you have made good profit between the entry point and this level. Check out the distance between the two. So you have made good profit. So that is how to manage your trade, all right? When price is going up, and in the other way direction, when price is coming down, okay, you keep putting your stop loss right here. The moment low price is breaking low until it will come back to eat you out. And the moment it comes back to eat you out, that tells you that price is going to change direction to the upside. I hope you understand that. So that is how it works in the financial market. And that is one of the best ways you can manage your trade successfully and maximize profit. So now let's take a look at the chart right here. To see the logical area, you can put in your stop loss, okay, as price keep moving in your favor. Now take a look. Let's say this is where price originated from. Let's, for example, this is where it originated from. Look at right here. I don't know if you can see. Let's say this is your EP entry points. Now take a look at price pushback. This is where you entered from. So the moment price pushes up to this level right here, you change your SL from here to this entry point. All right, you change it to this entry point just to be able to secure your capital right here, because this is where price is right now. You want to secure your capital. You want the trade to go risk free. All right, so you move your your stop loss to entry point as price is here right now. So now as price pushed up, reverse and pull up, breaks this high. This tells us that, see, I'm going up. So you want to move your SL from here to this last low. Okay, this is your SL. Now look at what price does again. Push back, pushed up. Look at how this high got broken. You move your SL from here, you change this stop loss value, the number right here, change it to this one. Look at this is your entry right here. Look at where you have the stop loss. So if price eventually reverse right here to eat this one out, you have made good profit between here and here. Now let's continue. Let's continue. So price put back right here, okay, went back up, broke this high. Then you want to move your SL right from here to this low, because this is the last low. So you actually want to target the last low as your stop loss to trail the price, so that you can be able to maximize profit as price keeps moving in your direction. It's as simple as that. So now look at it, went up, returned, put up right here. Let's go to the left hand side. Oops. Okay, so now look at, as price keeps moving, look at this area right here. So this low right here becomes another area for you to put your SL. Why? Because it has broken this last high. It's as simple as that. So now let's say you have your SL right here, your stop loss right here. Now this is where price is. If price eventually comes down to meet the stop loss value, then it will eat you out in good profit where you have the entry up to this level. Okay, if you do not know something like this, it's going to be a little bit difficult for you to maximize profit in the financial market. And this is not something that is hard, but a lot of people are ignoring little things, and that's why they are not making money. This is one of the best ways you can manage your trade. It's one of the best ways you can trail your stock. Okay, what I have shown you right there is trade management in terms of trailing stock. All right, and remember, trading as well is a very powerful tool to manage your trade accordingly. I hope this is very, very clear to everyone. If this is clear, please type me yes in the chat. If this is clear, please type in yes in the chat. I want to be sure we are still on the same page. Let me know if this is clear, everyone. If you have any question, please put them in the chat. If you have any question, please put them in the chat. All right, thank you so much, sir. Glad to have you on board today. Seems a lot of people are silent in the class. Okay. All right, so I think since there is no other question, because of our time, we'll be coming to the end of today's session tonight. So I hope to see more of you guys. I'm going to see more of you guys during the new year. We are not going to be here on the 25th. We are not going to be here on the 1st of January 2023. So I hope to see you guys on the 8th of January 2023. So pray to God to preserve us and guide us to them. So if you have any question, please put them in the chat right now. Let me know. Let me know if you have any question. Put them in the chat right now. There's some, or maybe, or probably you raise your digital hands. Let's help you out. Raise your digital hands. Right? You can raise your digital hand. Okay, that's our YouTube link. Okay, you can visit there. Then type in day 1 of 3 days Forest Foundation course. You can type in, okay, let me look for the link for you. Just a moment. Okay, I think that is the link for day 1 of Forex Foundation course. You can go through that. Once you finish day 1, watch day 2, watch day 3. It's going to make a lot of sense to you. And trust me, you are going to enjoy that a lot. Okay, so if you have any question, in 1 minute, put it in the chat. If you do not have any question, then type no in the chat. Type no in the chat, then so I can be sure that there's no question for us tonight. Type no in the chat if there's no question. All right. Thank you so much, Mr. Francis. Thank you so much, everyone. Thank you so much for having me here tonight. If you have any question, please feel free to chat with any of the admin on our group. So I'm going to see you guys next year by the special grace of God. So have a lovely night rest. Bye-bye for now, and a blissful week ahead. Bye-bye for now, and God bless.